Hey, good morning, guys. Welcome to Market Mondays. Hopefully, you guys had a great weekend. I'm here to give you guys a quick update on everything supposed that happened last week and what's upcoming this week. Before I get right into it, here's a quick dad joke, just to get started. Sunday was a sad day, but the day before was worse. It was a sadder day. Get it? Pew, pew. All right, so getting right into it. Last week, we got some really interesting information in terms of inflation and how it's impacted mortgage rates. In a nutshell, week to week, mortgage rates haven't really changed all that much, which is a good thing, especially with the amount of conflict that had just restarted in the last week and a half, 2 weeks, in the terms of the Iran and the US conflict. Now, since those basically 2 weeks ago, oil prices were going down, and then 2 weeks ago they went back up. They were below $70 a barrel. Now they're back at mid 80s per barrel. Now, but they haven't really changed much since the conflict restarted 2 weeks ago. And what's interesting about mortgage rates is that they haven't really changed much either since that the restart of the conflict as well. So on a week-to-week basis, we're kind of flat with mortgage rates. They are still elevated, which is all things are a good sign for now because it could be significantly a lot worse. So right now we've had a challenge of the peaks being higher in these next iterations of the next trends that we're seeing. We hope that this oil and this whole situation with Iran and the US do calm down, just because this has been the biggest driver in mortgage rates. But the storm is somewhat calm for now, or at least consistent. It's not so far getting worse. So, and that's what you can kind of see from this chart, is that for the most part, it's kind of flat, it's kind of sideways, not in the direction that we want. It's slightly, even VA rates are at its peak right now, which is unfortunate, but it's not spiking, which is what I want to see. So we hope that there's a little bit of exhaustion in the trend that we're seeing. And what's important about this whole conflict of oil is, why is it not spiking it? Why has it not spiked like it had been back in like May, when oil prices were, $120 a barrel? So the straight from use is over here, in this circle area right here. So a lot of oil comes out of Kuwait, Iraq, and all these areas, and Iran as well, and flows through this strait. 2 weeks ago, they closed the strait and stopped it, and also ended the ceasefire, which at this point, no oil is going past there. So what they're doing is they're circumventing that completely, and what they're doing is going through the east-west petroleum line and going into the Red Sea. That's how they're still getting oil out and still meeting somewhat of the demand. It's not as much as it was before this whole conflict started back in February. However, it is helping taper the demand. Now, what's nice is that it's allowed to go north, and then it's allowed to go south. The other tough thing is that there is an Iran backed group in Yemen that is threatening to close this straight through Saudi Arabia so that the oil can't flow south. If that were to happen, it also tempers the amount of oil that can come out of these areas, which is really unfortunate, right? We're just trying to get the flow of oil out. So right now the world is kind of on its edge of the seat. I'm trying to figure out what is going to happen next. Is the amount of oil that's going to be coming out of these areas, is it going to be reduced? Is it going to stop? How are they going to get oil back to the world? So that's going to be a very interesting conversation over the next, really from now until they decide what to do with this conflict with Iran. Most of it hinges on the whole nuclear enrichment licensing, or being able to do anything with nuclear fuel and power as well. So we'll see how this all goes. I'm hopeful. Oil prices haven't escalated as much as they had been in the past, back in May and June. So we hope that these other alternative routes are going to help at least temper for a while, and then we can move forward and just live a regular normal life. Now, the other things that kind of have helped temper mortgage rates too is last week, two inflation reports. The two inflation reports that came out last week have tempered how much mortgage rates have gone up over the last week. So that's been really nice. They came in a lot cooler than expected, which is a good sign. we were hoping that the Strait would be open all of July, and then we would see a really good August report. But right now it's not as bad as it was back in May. So if this flow of oil still continues coming out of Kuwait and Saudi Arabia, we could still see inflation improvements in August. Still, maybe just not as much as we'd hope. So overall, it's kind of in this weird line of trying to figure out what to do next and what's going to happen next. So we'll see how it all goes. I'm hopeful that this there's pressure from even more so from everybody in the geopolitical that's involved with this geopolitical mess that we're in to kind of add pressure to in this conflict once and for all. It's really unfortunate to see even lives lost in this unfortunate conflict. So there's pressure from manufacturers, even big manufacturers like China. All sorts of entities are involved to try to get this resolved as soon as possible. So let's hope for a very quick resolution and a peaceful one. So otherwise, that's all I got today. New Count.